say make money, money, make money, money, money. Make money, money, make money, money, money. Money makes the world go round. I'm not talking around.
Welcome in to another episode of Just the Tips. This time, the market is throwing up over everybody.
Hawk the market. It's not a Hawk Tua. Definitely not a Hawk Tua.
Well, it's a doozy out there, and we're going to be talking about maybe one of the only green shoots left in the market, Coreweave, later in the podcast. But first, maybe we just start with the market itself. George, Gordo, what do you boys think?
Sucks. Next topic.
I'm just sort of, it's just one of those things where it's like, okay, well, we all knew this was probably going to happen, or at least I think most people, sitting in the seats of investment bank, your trading desk, et cetera, knew the tariffs, across the board like they did so dramatically, most certainly would cause market turbulence. It was a totally foreseeable conclusion. I guess it just seems kind of nuts to sit there and say, oh, market's down how much? And, this is just good for us and we should just take this. And, I don't know, I kind of feel like people are already kind of jumping ship on the MAGA side and saying, I heard Elon was breaking ranks.
He's feeling the Tesla pain.
He's what?
He's feeling the Tesla pain, right? Telling all his employees to hold on to their shares. People aren't buying Teslas, right?
Well, Tesla's been hurt even more. Like, Tesla was already getting obliterated before kind of the tariffs came into place.
I mean, the tariffs don't hurt them. It's more the protests against Tesla.
I think they do, though. I think they source still a lot of their OEM equipment. I thought was coming from overseas.
I thought a lot of it was U.S. made. It was very little that touched them. They make a lot of their own parts. They're not, and they do it in the U.S. if I'm not mistaken.
Oh, must have either really good information or you have really bad information.
We may have to edit this after.
Past ChatGPT, right?
What do you think about this? What do you think about this take? Trump's playing 4D chess here, trying to refinance all our debt at a much lower interest rate. The 10-year is down it was down last time I checked on Friday. It was down to 3.8-ish, off of nearly 5 just a couple months ago. So, what do you think about the whole let's refinance some debt trade, and then just say we're kidding on the tariffs?
Well, you can't refinance it all at once, can you?
I mean,
listen,
the markets are...
the man was such a genius, right? This is what I keep going back to. Every once in a while I ask myself that question. Maybe I'm just not seeing the whole picture here, right? What am I missing? And
so you think Trump is playing 4D chess and you're not following?
Yeah. I'm still trying to play checkers, trying to learn the game of checkers. Yeah. But no, look at the man as a business person himself. He's not made money. He just inherited his father's fortune, and you would argue on an inflation-adjusted basis, he's actually worth less. He's destroyed value. So what makes you think that this man's such a genius that he can drive a huge economy now when he can't even, grow his own fortune? So I don't know. I think he's an idiot.
I kind of fall into the same camp, but I would say him and a lot of the folks around him have an enormous amount of market exposure.
Yeah.
Both in terms of straight public equities, I'm sure, as well as their real estate portfolios, I'm sure will get hit. There might be a lag there, but you would think that they would be feeling more pain here than almost anybody.
Well, they believe there's pain and then there's gain, right? So it's like your bench press, Bruce. When you're in the gym, you're your chest is burning, it's hurting when you've got those 3 plates on each side and you're going at it. But later, right? It's all gain. You just got to wait a day or two.
Is this foreplay that I'm witnessing right now? Again,
it's 4 plates on each side, but I don't know, man. I don't know. At some point, you might break your arms off, and then what happens?
Let's go back to the point. Okay, Well, first of all, I think there's a point there to be made. There probably is. These guys are smart enough to know that there's going to be dislocation, and maybe they position themselves to benefit. I mean, I saw that is it MJT? Is that her name? The Georgia crazy congresswoman.
Oh,
that's up
yes.
Trump's ass. Like she dumped a bunch of treasuries before the tariffs got announced, and like these guys. Maybe they, but yeah, absolutely. I kind of see the point too. Like they don't like this. The problem is that their ego is bigger than their wallet. Like they're not going to. Walk this back unless they absolutely have to because it looks so stupid, right? I mean, like you have to proceed, right?
I think part of it is like gamesmanship though, and just posturing. Like I think
negotiation. Yeah.
No.
I think he'd love to be like. I think he'd love to be like, hey, just kidding, and then just tell people that he extracted some sort of like
maybe
nominal victory.
But listen, like there's been like that's what surprised the market. That's why the market was so taken aside by this, right? He's been like. Telling everybody he's going to do this the whole time, and everyone's like, no, he's not really going to do it. Then he does it. He does it to an extreme amount, and the market tanks because no one believed him. And he's done everything he said he was going to do. He's been getting revenge on the people he was going to get revenge on. Like, he is actually doing exactly what he said he was going to do. And Howard Letnick put out a tweet I was looking at earlier today. He shows Trump on Oprah, like back in, I don't know, the 80s, 90s, a much younger version of Trump. And he's talking about tariffs and how we get ripped off. Like, it was just a younger version saying the exact same things. He's always believed that we need tariffs. And so, end of the day, like, I don't think he's playing around. I think he really believes this is going to be what's best for America. But, like, yeah, are there things that countries can do maybe to get back in his good graces? Oh, we're going to build all these factories in America. We're going to do X, Y, Z. Sure, like supposedly Vietnam got back in his good favor somehow, but they had the most extreme tariff. So I think he's not going to take it away without getting something. I guess the question is that a big enough concession? But I think he does really believe in them. So I wouldn't doubt that we're in this for a longer haul than we might otherwise think.
I think I think once the base starts revolting, like he'll feel like I think he values popularity, more than sort of like the moral victory that you get from.
We'll make you more popular than 4 years from now. He's a great savior of the economy. All the industry's back. You just got to be patient.
I don't know. I'm not. It's not clear to me that like Trump plays the long game though. More than looking at the polls every day and wondering if he's the most popular president of all time. Like
that was Trump. That was Trump V1. This is Trump V2. It's a different Trump. It seems like.
It's the never
it does seem like
Trump.
But
it's King Trump.
King Trump.
I just feel like
political will. Right, here's my real question. Right, this is where it all I think comes. Wherever it's the road, like people are in pain in his constituency. Right, like people in white guys in pickup trucks, those families, that voted for Trump are suddenly going to feel all this financial pain. We're going to see how strong their religion is. Because right now, everybody that I know that's in MAGA land is saying, hey, this sucks. We agree it really sucks. But you know what? This is going to get way better. We're going to rebuild this economy. And so how many months will go by before they start to question that religion?
Oh, yeah.
They
will revolt, I'm sure.
Yeah, I think that's true on the popular side. That's what I mean. I think he's going to feel that like immediately. I think the thing is though, like at his base, he doesn't really care about his own base that much, but he does care about the rich Republicans that run these businesses that are calling him up like, dude, what the fuck?
Rick Kudlow is calling him up.
I mean, the base is turning though. Like, I don't know
on.
if you guys saw this. Like, even like Joe Rogan came out like in his podcast talking about like deporting that guy to El Salvador. Like, I think it's these small things that are going to start to add up, and he's going to have to like figure out a way to like save face here.
Gosh.
So it's popular whether Trump's desire for popularity overwhelms his desire to see his economic agenda and belief in tariffs play out. So which string pulls stronger?
He can't be unpopular for very long. I think this is going to be in like
he's
2
a lame
weeks.
duck president.
Yeah, but he can't. Well, there's a midterm coming up, and that can totally screw him up if he loses both houses because he's so unpopular and. He just doesn't like to not
Wisconsin
be
might say that, right? I mean, Elon poured a bunch of money in there, and they lost.
Yeah, well, that actually was a huge win, right? There's a lot at stake for the Dems on that one. Yeah, I think that he's not going to be able to tolerate not being liked. If he becomes like Hoover, like a depression, scenarios coming, I think his discipline to stick to his guns is way lower than advertised. Like he doesn't have any vision. Like
So
he says he has one.
if you believe that, what
Yeah.
view are you taking in the market then? Are you a buyer then if you think he's gonna double back here, or is the damage that's been done irreparable? Like our trade partners are like, screw you, America, we're out of here.
God, man, I'd be afraid to step in front of this trade because he's so volatile and unpredictable. It can kind of go either way. Maybe months before he comes to this decision and comes back. If he does it really rapidly, I'd be a buyer. But like, I think it's going to be just long enough that people are going to lose confidence in his. Even if he rolls it back now, people are going to go, well, what's he going to do next? Like this guy's insane. Markets hate that uncertainty. So like, I'm not really a buyer in almost any case unless he just sort of yanks this like next week, which doesn't seem imminent.
I don't know if I'm definitely a long-term buyer. I think here, like if you ever wanted or liked the stock, it's like now on super duper discount, so you can get in at like probably a more reasonable multiple than we've seen in the last 4 or 5 years. I will say the two guys that feel like, I don't know if you guys have heard from anyone else that have got it right, are Steve Cohen talked about tariffs being horrible like before this even became a real concept. And our guy Warren Buffett, man, $300 billion in cash on the sidelines. Like
92,
these guys
93
look
years
like
old, doesn't
geniuses.
matter. Or no, he's older than that, right?
Yeah. So.
Yeah.
Well, I mean, it's basic economic theory that tariffs are not good. They're not stimulative. They're inflationary. Like, they don't.
They're just taxes. Yeah.
Yeah. So with the asterisk of like how elastic is demand, who pays it, but like at the end of the day, it's inflationary. Like, so there was never anybody that I think worth their salt that thought tariffs were good. It's a pretty small minority of economists who are like, oh yeah, because they ran that experiment in the 1920s. I don't know. Like this is just pure protectionism, for his base, meat and potatoes. But like, he thought he could do this and make everyone happy, and I think he's going to quickly see, it's so drastic what they've done.
Yeah.
It's insane.
I am a little surprised though, just because he has a lot of like different folks around him this time, like than he did last time. Like there's a lot more venture folks that are around him.
Vance himself, right? Has some sense economically, right?
Yeah, and they're like sort of fake economists themselves, and they probably think highly of their own advice, and like it doesn't.
If they're not loyal, they need to be thrown out.
I mean, I don't know. I would think that he would be listening to some of these folks that are directly around him, and I'm like, I would be shocked if they're as pro-tariff as like what we've seen in the last week. Like that feels like
maybe it's Putin.
Way out of the fairway.
Maybe Putin's pro-tariff. He's trying to. He made Trump. He's got the P tape out, and he's like,
bad American economy.
Drive this car in the ditch, or I'm going to show everybody the P tape. I don't know. Once again, Trump could not be humiliated. That would make sense. The compromat, or even worse, right? They pay for everything.
So it sounds like you guys are both on the sideline. You're going to sit there until you see some sign. I mean, you'll probably miss the first pop, right? But you're going to sit there until you see some sign that Trump's going to backpedal.
No, you should. I think you should start buying. Like you don't have to buy all at once, but I think like people that like certain equity names, especially, like if they think they're high quality businesses, they're now trading at lower multiples than ever before. I think.
So you're saying, though, that the economy, you're basically saying that this is a blip, and this is not 2008, 1987. It's not one of the big crashes that came in front of a big drawdown. Like, you're saying this is just a blip.
Well, yeah, I mean, this is entirely man-made. Like, entirely man-made. And so, like, in 2008, I don't think it was, but it was, like, it was sparked by, like, a mortgage crisis that wasn't, like, levied by a single person, couldn't be taken back by a single person. This one can. And I think, like, to all of our points, like, the pain at some point, the threshold for pain will get so high that he'll be forced to do something different. And, I mean, fundamentally, I think a lot of these businesses are still very, very high quality. And if you like them, you should be buying them.
So the question is, here's the economy. That's what I want to know, because the job report looked pretty good, but I feel like things have not felt great.
It's backwards looking.
Time. Yeah. So, and now you got all this uncertainty, so hiring's going to stop, and I just feel like the economy was like soaring when this happened. It's a shock that even if withdrawn is going to hurt for a while. I don't know. I feel like the economy is not in great shape, and maybe it was getting a little better, but this is probably knocking it right off its legs just as we were trying to get better. So if that's true, like I don't know if I'd want to be buying in front of, just disappointing. I don't see anything re-accelerating anywhere. Do you guys
Well, let me give you one other data point that I thought was interesting. So Altimeter, and I think you turned me on to this, Gordo, puts out a weekly on Friday, and they said at the end of the day, Thursday, the median next 12-month revenue multiple was 4.8. Going back 10 years, we've only hit that, and this is probably for software. We've only hit that level twice. Once in February 16, the median fell below 5x and stayed there for 3 weeks. The low bottom at 3.8. And I don't remember what happened in 16, but the second window was a week-long period in November 22. So that's when the market was falling in 22 when we started hiking rates, and it bottomed at 4.6. So the difference here, I would argue, maybe, is you think earnings are really going to bottom out because of tariffs, and so that multiple may not be as low as it looks because the earnings are going to shrink. Therefore, the multiple actually goes up. But outside of that, that actually screams buy. It's cheap. It gets that cheap for software names, and you jump in and you buy and you make money. So, which one is it this time around? I will tell you my personal approach is I just dip my toe in slowly. So every time the market dips, and this one I'm a little more cautious than others, but I just slowly buy. So every week I commit some money and I go in and I buy a little bit with a long-term view. So that's my approach, and I buy things that look like they're on deep discount. And I think 5 years from now, will I be happy owning this? And usually the answer is yes.
In 2008, there were so many names that looked so dislocated. I mean, obviously, it was like below tangible book, just kind of things, just everywhere. They were absurd, and so I would love to see that again. I mean, yes and no. I mean, it's a bad day for trading desks and banks and IPOs, and you don't get those opportunities very often. So I kind of agree with you, but I'm struggling. This environment, they're never exactly the same, right? Every scenario, every time these things happen, or they look similar to something in the past. But there's no big deleveraging. It just feels like, I don't know, deregulation will help from Trump, but there's just so much uncertainty, and this is just so nasty. I feel like maybe things could be worse than people think. I
mean, worst case scenario, you have 4 years of Trump, but our trade partners move elsewhere.
You have 12 more years of Trump.
12 more years of Trump. Yeah.
I think the third.
We'll have a stroke before then.
Is looking like a harder and harder shot here with the.
Well, if you're a dictator, you don't really run fair elections, so don't worry about that.
Hey, you stole the one whole term from me, so I got to take that back. So we're gonna skip.
Well, he needs to backdoor it through JD Vance.
Yeah.
Heard about the plan, right?
The Veep.
Yeah, like Putin. Was it whatever the guy before him? Anyway.
All right, the thing is, if you think about in 3 or 6 months, say the pain is this much or more, you got to believe that we're gonna turn the ship around in every way we can from a policy standpoint.
But if you're Canadian and you've sworn not to buy U.S. goods, are you suddenly going to buy U.S. goods again, or have you already gotten your taste for Canadian whiskey and you're like, screw the Americans?
No, of course not, man. They're always going to buy American whiskey.
I don't know. They're pissed.
Jack Daniels, come on.
Harley Davidson.
Dude, I don't think we would stop. I don't think they would stop. We're too hooked on to whatever we're hooked on. We buy
if 6 months goes by and you stopped, you've already gotten rid of that habit.
That's like saying we're gonna buy we're only gonna buy an iPhone that's made of American parts in 6 months because.
But are you gonna pay $1,000 more for an iPhone?
Right. It's just we don't care about that. We just care about
You don't care about that, but most people do.
No, I'm saying no. We don't care. We wouldn't care that it was made in America. We would pay for. We would want the cheaper one.
Yeah.
Exactly. No matter what. Yeah, that's. I'm we want cheap whiskey. We want cheap cars. We don't we don't care what country it's made in.
Yeah.
So.
Made in America. Just the tips, by the way, it's made in America.
Well, it used to be partially made in Mexico.
That's true.
That's true. Well,
good thing we got out of that business.
Yeah, that's right. Yeah. So anyway, let's. Are we done with that topic? We're gonna go over
why don't we do a description? We don't always do this, but why don't we do a description of what we do? We can even move that to the top, but.
And we can do a disclaimer too, right?
And the disclaimer. So Bruce, do you wanna take it away?
Yeah, I'll do the disclaimer first. So remember that this is just a recreational podcast. Use it at your own risk. We don't make any stock advice. We don't represent any for, against, in between on anything here. So just be careful with how you use it. In terms of what Just the Tips is, so every couple weeks we get together and talk a little bit about the relevant news items that have happened over the past couple weeks, and then we focus on one stock name where we take a bull side, a bear side, and then we give our unvarnished opinion at the end. Today we will be talking about, I think, the most recent IPO that's hit the market. A little company out of New Jersey called CoreWeave that started as a crypto miner and has now become the AI poster boy. On the bull side, we have
Gordo.
and
Hard to believe that I could do. We're gonna see why I don't usually do the bull case.
and on the bear side, we have George. This will be a good one because there isn't very much, if any, sort of Wall Street research out yet. It's the quiet period after the IPO, so we'll have some pretty unique insights here, and look forward to the discussion. With that, let's turn it over to Gordo.
All right, so I had sort of a George-like title. So,
An awesome title.
Sucks. It's like real bad.
Real
But
bad.
I couldn't. I didn't put no cycles against it. But all right, I'm going to share the screen here. Oh wait, screen. CoreWeave share. Okay. View.
Oh, jeez, that is bad.
Yeah, that's rough. Okay, but I did put a pretty cool picture on there.
And if you can, Gordo, talk loud. I'm having a little trouble hearing you.
All right. How's that?
That's better.
So, real quick facts here. I mean, this is a recent IPO. They raised 1.5 billion. They were going to raise like 2.5 billion. There was a pretty big downsize in the IPO, so people kind of freaked about that. It went public at $40, and they traded flat, and then they traded up. I think last I looked, they were in the high 40s, right? They pulled it up. But their revenue in 2024, 1.9 billion. It was up versus like 224 million in 2023. Market cap 26 billion, enterprise value 33 billion. So basically, they rent GPU-based servers to cloud players. 250,000 GPUs across 32 data centers. It's actually, I think, a reasonably easy business to understand. But yeah, they're we'll talk about Microsoft being one of their big customers. So I'm going to try to keep this really simple. Because frankly, I think this stock is either going to, it's kind of, it's an act of faith, either way. I think this thing's already kind of got a pretty nasty reputation as not having a sustainable competitive, advantage. And, I think that's a fair comment to make, initially, just, hey, these guys are, basically a cloud provider. They're competing with Amazon, like in Microsoft, who has their own data centers, who's their biggest customer, God, this is going to go away. It's toxic, but I would challenge people on that. I mean, this company exists for a reason. Some things to consider is like, of course, the AI gold rush is just beginning. I think we kind of all broadly believe that, whether, over the long term, in the short term, there's a question, but just there's a massive increasing demand for what they call, contiguous compute. And so these guys have the ability, they're building new data centers that are just massive. And, some folks are having to stitch together data centers, and that's allegedly an advantage. But, most of their revenue is coming from long-term contracts. They have 15 billion in RPO.
Billion, pinky to the corner of my mouth.
Yeah. They have an open AI contract that's worth 11.9 billion through 2030. So these are not that 1.9 billion is just the beginning. And I think it's also very interesting that NVIDIA felt the need to own, around 5% of the company. Kind of important company to make, it's an endorsement effectively. And so, why do these guys exist? They have proprietary purpose-built software and hardware for AI. Again, I'm not qualified to argue whether or not that's true. But I would just say, look at the scoreboard. These guys grew, 700+%, year over year. NVIDIA owns them. Microsoft loves them. OpenAI is obviously, the kind of leader in AI on the software side. So arguably, these guys, I kind of feel like the proof is there. Like these guys would not exist and be going public if they didn't have something differentiated. And I would argue that, look, these guys do have some, Microsoft is really pregnant with them, they were, I think it was 65% or something of revenue in 24, and they're about half of committed contracts. So huge kind of implicit OpenAI play here. This is a huge market, $80 billion in 24, $100 billion this year. These guys are 2% of, less than 2% of it. So, I think that's shows that, it's a big open opportunity. There's lots of room for them to get much bigger. And so, I think the real question, comes down to kind of valuation. There's only one company out there with a estimate, one broker, and they're hold rated. Probably just went not on the deal, so they came up with a hold, which is hold is a sell, as they say on Wall Street. So the one guy out there. So there's no consensus, is the point. But I think we can kind of get around that. What I would really kind of point to is just looking at some of the other. This comp table, you could quibble with it, and again, I'm just trying to just cut to the chase for people that want to make a call on this thing right now. And it's just like, okay, fine. Like, if you look at forward revenue multiples, they kind of range between 3 and 9 times. Right? We just talked about software. Like, that's a better margin, higher quality business. This is not as recurring. It is contract, but it's not software. It's not as high margin. And you gotta look at the list here. Like, Microsoft's trading at 9 times. That's the high number. Amazon's not at 3, but it's got retail in there. So, I just feel like, hey, just get those ranges in your mind. So I guess the next question is, like, what do you have to believe to buy this? You got Jiminy Cricket for those folks who are not at home, who are not watching the video at home. And so for me,
this feels like a lot of slides.
Well, there's not a lot of words. I would take one of your slides is probably longer than this entire presentation, and I'm going a lot faster. So just sit down, okay?
I got a lot to say.
You're right. That was a cheap shot. I don't have that much to say. This is basically it. But I'm going to argue, I had an analyst boss who used to be a boss for another person in this group, say that stocks work for one or two reasons. People get all complex on it. And, at the end of the day, I think this comes down to, like, you buy this thing at EV at 33 billion, you want to double, right? You don't buy Coreweave because you were hoping to make 10%. This is a super speculative investment on AI. And, so let's say, fine, like, to get that kind of valuation, I'm going to argue, I'm going to take that midpoint of that revenue range or revenue multiple range of kind of 3 to 9, that average around 5 times. And you have to believe in a revenue of 13 billion versus 1.9 billion today. Like, I think that's what you really are playing for, is that kind of massive increase. So that's a 7x increase, I think. And I think that's kind of what you would have to believe. And they just did that in a single year, yes, off a small base, but hey, 1.9 billion is not nothing. The market is huge. LLM sizes are still doubling, every 18 months or 2 years. Inference hasn't really happened. Like, we can go to all the different reasons about why the AI market is huge. We cover them at length in this pod, but I'm just going to argue that this market is gigantic. These guys are going to be taking share in it. You've got the prettiest girl in the room, NVIDIA, already in bed with this company. I'm trying to sexualize this as much as possible. But Microsoft and OpenAI, right? These NVIDIA and OpenAI have definitely, put a lot of skin with these companies.
NVIDIA has been
relative.
great at investing in companies and then exiting quickly, like SoundCloud as an example that everybody got all hot and bothered about, which is probably a business that deserves to go to zero eventually. But
do they have $2 billion in revenue? And they have, OpenAI too.
High quality. They invest in people that use their product, which usually doesn't work out well.
Yeah, so it sounds like there might be a bear in the room, but wait your turn, you cuck. So anyway, sorry, that was unnecessary. But anyway, you could quibble with this, but I think it's really an act of faith. Like, do you believe that these guys are special, like either because of OpenAI owning them, or having a big being a big customer for them? I mean, that's just obviously, I think, pretty interesting. And NVIDIA maybe NVIDIA investment, you weight less in that calculation, based on what my colleague George just said. But, I'm going to argue that this market is gigantic. The winds at their back. They have the right dance partners and endorsements. Like, I'm going to bet on this thing getting to 13 billion. I'm going to bet on this thing doubling. They're not going to get to 13 billion. There's people are just going to believe that they're going to get to 13 billion. So if they do 4 billion, 5 billion, they'll probably get credit, and the stock will double. So easy buy, easy money.
Do you think this is next year they're going to double revenue?
I think that's right. I think they will.
So they grew from 200 roughly to 1.1. So let's give them credit for it was. So now the next double from 1.9 or the next 7x, right? Going from 1.9 to 13. That's growing 11 billion. Holy crap! I don't think there's staff for that. I don't think there's any way that happens. Like you've got to be
7x. Yeah, they're gonna have to add some people for sure. But 2x. They're probably going to do that. Like the whole market is.
What company has ever gone from like 1 billion to 13 billion? I bet no companies. I don't know the answer to that, but I bet no companies have done that.
Well, in what time period though? It doesn't have to.
Yeah, well, you're saying a year.
No. I'm not saying they're going to grow 7x in a year. Like maybe 2x, 3x in a year. But like I'm saying, you have to believe that they're eventually going to grow 7x because these things get priced so forward. Like, look at Nvidia's market cap. I mean, not a week ago, okay, but like even now,
Nvidia's had incredible growth.
Yeah, but
over a
it's
sustained period of time.
Yeah, but there's an awful lot of growth priced in.
13 billion in 10 years. That's going to be a different multiple.
Yeah,
with their commodity business,
it's not going to take 10.
You might get one or two turns of revenue if you're lucky.
This market is going to be 600 billion in 2032, allegedly.
Says who?
So this market, for them to get 13 billion of it, that's it just doesn't seem insane for them. In fact, that's 2%. If they keep 2% share on that number, now that's what 7 years. Right, so it's even that if they maintain share over 7 years, but I think that's going to get priced in well before they deliver it. Right, you're going to have multiple compression when they get to that 13 billion. That's how you get to the 5x. You'll probably be 65 billion for 3 years. It'll get priced in. It'll get pulled forward just like Nvidia, and everybody else, and Microsoft.
Gordo, how do you think about their competitive differentiation? Like, are they just selling, straight compute? Or
obviously not, or they wouldn't exist. I would just say I can't argue. I already said that. Like, I don't think that I have the technical chops to argue that in a technical way. It's allegedly their software and hardware is differentiated, and I've heard that story before. I mean, hardware's bullshit. There's not much differentiation there, I'm sure. But like on the software side, maybe there's something, the orchestration. But I think there's a reason. These guys they started out in crypto. Ethereum mining, and then I guess in 2020 they shifted and they rapidly became important. So I think they have something, that or they wouldn't have become so important. So I'm just going to put it to the scoreboard. I don't have the smoking gun. I don't have the patent, but I would say you tell me how they got here without something differentiated.
I think that though, as I think about the future, this is a race where every major hyperscaler is going to be interested, and the thing that's interesting about CoreWeave, for me at least, is one of their biggest companies or one of their biggest customers is a hyperscaler, Microsoft. Mm-hmm. And so obviously they either have the distribution, the footprint, the access to GPUs in a way that Microsoft can't do themselves or needs a third party to help get access to. But the thing that worries me, I think, about the future is if it is a race to the bottom just on hardware itself, is there something that differentiates them on the software side? Or do you have a bunch of hyperscale clouds building their own GPUs that maybe aren't as good as NVIDIA's but are good enough, and you combine that with them, being able to be flexible on margin, right? These guys have a very high gross margin for selling hardware effectively. And so do you end up, creating a situation where it's a race to the bottom on hardware, access becomes more democratized, and then you have a maybe challenging situation on growth, and on a potential for profitability or even a gross margin profile that's as strong as it is today. That's my fear.
And that is the crux of that's really the entire question here is do they have anything? But how do you get $2 billion in revenue and not have anything?
You have GPUs that not everyone can get their hands on.
How did that happen?
Oh, they've been a long time NVIDIA customer, right? They built up for Ethereum mining before LLMs became big.
They're just happened into and lucked into, out of all the miners, just becoming the leading sort of non-big
Well, they made the shift
provider of GPUs
at the right time, right?
So this is totally this right place, right time in a market that was growing super fast and everybody wanted to be a part of. They were able to secure GPUs with no differentiation, no reason to exist, and they're going to go away tomorrow. Like, I just can't buy that. Like, this is the bear case. Let's jump into it. Like, we're litigating this now. Like, I feel like you're saying we've said everything you're going to say, so let's just do it.
Well, I think they did buy Weights and Biases, which was a private company, right, that does some more software development for folks using AI, kind of a developer type kit. So they are attempting, I think, to drive more differentiation there. But that also says to me that they don't truly have something differentiated if they're going out. They paid a pretty penny, I think, for Weights and Biases. I don't remember what it was. It was over
1.8 billion.
Yeah, I was going to say about $2 billion, so that sounds right. So yeah, I mean, I think they're trying to drive differentiation that way, but let's hear the bear case. Hear me roar. Isn't that what
How
Kate
many
Perry
slides
says?
do you have? 14?
All right. Let me pull up this bad boy.
They analyzed their SG&A last year, and it's growing faster than their sales.
Well, I do
I'm
talk
just
about
picking
their
on you.
sales, so just so you know. All right.
Oh, here we go. The title monkey.
Here we
Let's see this
go.
come
The
out.
title. You don't need AI to see this ain't a buy. Get that? The rhyme?
Oh, God, I'm going to kill
All of the benefit you get from this reasonably okay title is negated by the shittiest picture I've ever seen of all time.
It's AI. Come on.
Completely neutralized.
I went on title this time, finally. Even if you don't like my picture. All right. Let's keep going. All right.
Is that a sex robot?
So I do have more slides as usual, even as the bear. So
At least it's not as
bearish
dense. Thank you.
thesis
by the way.
number 1. I even label them for you. Is called Microsoft's BI itch. So basically, these guys have extreme customer concentration. So when companies come public or they trade in the marketplace and they have a dominant customer, they usually trade at a huge discount because why? That customer can disappear very fast and very easily. Microsoft makes up 62% of their business. Now, normally, okay, great, that's a concern, but it's even worse because Microsoft ultimately is a competitor here. They have Azure Cloud. They want this business. And if they don't want this business, it makes me question why they don't want this business. It's probably not an attractive business. So something seems really off here. And I think it really comes back to, these guys have access. They've had access to NVIDIA chips. Microsoft has used them as overflow or they can't service the customers that are coming in that want this demand, and so CoreWeave has been a convenient partner for the time. But ultimately, long term, Microsoft's going to take all the profitable business of what they're bringing them themselves, and so that 62% of revenues is going to disappear, or at least the profitable piece of it is going to be gone. And so I don't think longer term, I don't think you can depend on them. If they leave, these guys have a lot of debts, debt service that they've got to be able to handle. We'll talk about the debt. So they finance themselves through quite a bit of debt. So again, customer concentration is already a problem. Your revenues fall. Well, it's even worse if you have a ton of debt, because if they go, you're in a really bad spot. The other thing that can happen with customer concentration is just, end of the day, you end up customizing too much for one customer. You end up accommodating that customer too much. And you're not really a broad platform for the market. So not saying that happens here. It's just something that I highlight as a risk. And then end of the day, Microsoft is seeing the margins that Bruce talked about earlier, 74% gross margins. That's huge for, offering a commodity service. End of the day, Microsoft has huge negotiating leverage as a 62% customer. They're going to negotiate that down. That's not sustainable for, a commodity service. So I think number one, Microsoft being Microsoft's BI itch, as I'll call it, is troublesome. All right, bearish thesis number 2. They are not differentiated and they have rising competition. So I think basically what's been their success is access to NVIDIA to date. So they've had the chips, and there's a scarcity of them, and so people come to them because they have them. There's nothing magical about what they provide. The challenge is, the next generation of GPUs that have been coming out have been significantly better and better. And so if you heard what like Jensen Huang said in, at his own conference the other week, GTC, he was saying how Blackwell is like destroying hoppers because, end of the day, they're just so much more efficient. So if you look at Blackwell chip versus a Hopper chip, they're anywhere from 2.5 times to 4 times faster, depending on whether you're doing training versus inference. And then they're 25% more energy efficient. Those are huge gains for next generation. And so a lot of what CoreWeave likely has is previous generation chips that are being depreciated faster than a normal cycle than they've historically been. And so end of the day, if their data centers are sitting full of these chips, like I would surmise they probably are, they're going to have challenges keeping up with folks who are buying and get access to the latest. And NVIDIA is working on pumping out more and more volume. Eventually this shortage is going to go away. So their competitive advantage will go away. And hyperscalers, like end of the day, you have Google playing here, you have Amazon playing here, you have Microsoft playing here, you have Oracle, all these guys, huge balance sheets. Like they're going to figure this out. They already have huge businesses on the traditional compute side. Like if they are missing something on the AI side, they're going to be there. And some of their bet has actually been developing their own chips that are cheaper than NVIDIA. So a lot of these guys have developed their own processors, and they tend to be more focused around inference than necessarily the training piece that NVIDIA is great for. Maybe NVIDIA will prove that they're great for inference, but they generally come at a premium. Like NVIDIA's gross margins are extreme for a semiconductor company. They're charging a premium. And so if you're Google, you've created these tensor processor units. Amazon has 2 chips of their own, one for AI training, the Trainium chips, and then they have ones for inference. Microsoft just came out with theirs. They're starting to do this. They call them the data processing units. And then you even have startups that are playing in this game, like Rock, that run a cloud service, but they've developed their own chips for inference. I know personally I've been involved with companies that have run on Grok, and they've seen huge uplift on inference from cost and just speed of the chips. And so end of the day, like if your competitive advantage is you rely on NVIDIA, that is going to get competed away. And I think the folks that really have silicon that can offer a broader offering, like the big hyperscalers, are ultimately going to win here. So once that scarcity goes away, like these guys are going to be the ultimate commodity, if nothing else, and at small scale. Bearish thesis number 3 is they have a lot of debt, and their debt is understated. So for a company IPOing, they have $6.5 billion in debt. At about $1 billion of EBITDA, they're levered 6.5 times. But wait. They have off-balance sheet commitments. So what does that mean? Oh, they have leases. They have all sorts of things that they don't have to actually call debt, but really is debt. So they have $15 billion in lease commitments on top of that $6.5 billion. So call it $21.5 billion in debt. And a company is technically losing money on an operating basis, on a net profit basis. So you have a huge debt load, a commodity product, and they're spending almost 20% of revenue just on interest. So it's not, not without a ton of risk here. Like if anything does not go perfect, like these guys are going to be like drowning in debt. The other thing that I call out is, they're fairly profitable on an EBITDA basis, which is a little misleading because one, you're ignoring the depreciation and amortization, which goes along with the huge capex they have to spend on all these chips. Mm-hmm. The other thing that actually makes them profitable on an EBITDA basis, and again, that's earnings before interest, taxes, depreciation, amortization, is they don't spend a lot on sales and marketing. They have a handful of big customers, aka Microsoft. So they spent less than 1% of revenues on sales and marketing, which is unheard of. So $18 million in 2024. the goal to expand, and they talk about like you have to get to like enterprise workloads, just like all of the big clouds do today. They service enterprises. Well, most companies that service enterprise, they're spending 25 to 50% of revenue on this expense category. But let's just say, like, end of the day, they're best in class. Like, DigitalOcean is another small player in this space. They tend to deal in more traditional compute. We actually covered them early on in our episode, Cake by the Ocean. They're extremely efficient on acquiring customers. They tend to focus on SMB. But they still spend 18% of revs over the last 12 months. So, today they're 1%. These guys are going to have to spend a lot more on sales and marketing. So, end of the day, I think their cost basis today looks really cheap, and they understate debt. So there's a lot more here. This might be the prettiest, the moment. The reason they went, public in a bad market is this might be the moment they look the prettiest because they haven't had to spend on sales and marketing, and they have a lot more debt that's going to come, on here in the coming time frame. Bearish thesis number 4. I've got these all day long, my friends. Founders. The founders are not really what you would expect the folks to be running, an AI data center company. They're folks that come from a hedge fund. They're financial engineers, not real engineers. And so they really had a competitive advantage here. I think you would see a very different profile. They also have extreme voting control, which is usually something that causes some of these, can cause stocks to trade at a big discount. They have 83% of the voting control. So end of the day, no one can come in and agitate and knock them out. And then the thing that worries me is, like, the founders sold, depending on the founder, anywhere between 11 and 16% of their stake, a while back, and cashed out $500 million. And they still hold a significant amount of stock. But like, if you are sitting on this gold mine, you don't cash out when the value is low. You cash out when the value is high. So I think the founders are telling you right now, like, hey, we know, like, this is the prettiest this girl's going to look. Like, the makeup's going to fall off. The hair's going to start falling out. She's going to start putting on some pounds. And maybe that's this is not a very woke analogy.
It's very sexist. It's very sexist. I just want to be on record as saying.
All right, fine. Gordo's going to lose his hair.
I shave everywhere.
He's got hair everywhere. All right, you heard it here first. Anyways, I think the reason they push into a bad market is they know that their girl is not going to look this good tomorrow. So valuation. So I think end of the day, like, people are excited about AI. That's the other reason you can go into this market. And so you're saying, hey, look at AI hardware. It trades 25 to 40 times. High growth SaaS. Oh yeah, we grew 700%. That trades 50 to 20 times revenue. We should trade there. Realistically, I think where their business model is closer to is somewhere between the cloud hyperscalers that trade 5 to 10. Now they're diverse. They have lots of different businesses, or what you would call like your enterprise hardware providers. And those are folks that aren't really differentiated necessarily. Feels like they're closer to that, and you would see those businesses typically trade closer to 3 to 6 times.
It's a service business.
What you're saying? Well, Supermicro, is selling servers into this market. That's an example of someone. Dell, all of these folks. Equinix is
Azure,
provides
AWS. They compete with
Equinix
AWS.
is more of a REIT.
What's that?
Equinix is more of a REIT, but nonetheless, point taken.
Yeah.
You can't say that the guys that sell the service providers that they have the same business as the suppliers, but forget that sleight of hand. Fine, continue. Proceed.
All right. So, finally, I'll get to the valuation piece. End of the day, I think I did a high base, low case, and so I said, okay, next year, like, best case scenario, let's say, they grow. I'll start with my low case. My low case is they grow basically the same amount on an absolute basis they grew this year. So they, add another, call it $900 million in revenues. They get to 3.6, or actually that's even more than that. Sorry, they grow to 3.6 from 1.9.
Yeah, they had 1.7 because they had 1.7 in 2024.
Yeah. So they double basically almost. Here they grow 88%. You're looking at a forward revenue multiple of over 9 times, which is well above kind of that that group of either the hyperscalers, cloud hyperscalers today that we saw, or those hardware players. If they grow, on the high end, I said, okay, like let's say they're able to achieve kind of the forecast that's out there that I saw, which was 8.1, and that says they still grow 323%, which is huge if they can actually accomplish that, especially in a market that's heading down. And that still puts you at the very high end of like any hardware player at 6.6 times. 4.1 times. So I think for these guys, like, they're not necessarily cheap. On an EBITDA basis, they look somewhat attractive. Call it on the low case 15 times to 6 times. However, again, I would stress that I think the EBITDA is overstated because gross margins are not going to stay this high. They're going to have to spend on sales and marketing, and then EBITDA is really not the appropriate multiple to look at here. And so, like, end of the day, they have so much depreciation, amortization expense, and interest expense that, like, I would just throw that out the window. And so, like, end of the day, they're not profitable. You kind of have to look at that forward revenue. And I think there's just so much risk here. You're not really getting a discount on this business. And so, for me, like, I don't know why you would try and take this risk on a non-differentiated business, tons of debt, doesn't trade cheaply, and is going to be competing in a space with folks that are actually doing things at the silicon level, producing chips, have bigger balance sheets. Like, there's just, to me, no reason why these guys win.
How much cover do you think that they'll get from NVIDIA, given, like, the existence of CoreWeave is obviously a huge benefit for NVIDIA, right? As, like, all of these hyperscale cloud companies are developing their own competing chipsets to basically take out NVIDIA, like, this is a company that wouldn't be able to do that. Like, how much air cover do you think they'll give them?
I mean, NVIDIA, it's hard to say, right? They own a small stake. They haven't shown that they stick in their investments historically, especially the public ones. They will sell out of them, aka SoundCloud is the example.
Different situation, though, right? These guys are a foil against, an insurance policy.
Yeah, but at the end of the day, if the end market's
GPU.
not buying, you owning them is not going to change that, right?
No, I guess that's true. I guess if Google or whoever has a better product, that doesn't save them.
No, I mean, at the end of the day, the end market demand has to be there.
I think the argument is that, like, eventually NVIDIA would have to get into the cloud business themselves and compete directly against these hyperscalers. And so in order to do that, they'd either build their own kind of cloud or they would use something like a CoreWeave, but they're definitely incented to keep a company like CoreWeave around, alive, and doing well in the market.
Yeah, but I don't think they're going to pay a premium for this thing. I mean, at the end of the day, they don't need to pay a premium.
So what's it worth? I don't feel like you've said. Like, what do you think it's worth? Based on, like, this.
I think it's more in that hardware. I mean, end of the day, it's like, what do you think they're going to do next year? I'm probably in line with my base case, which says, okay, you can grow almost 200%. Let's say you execute on that. You get to $5 billion
almost
of revenues.
100%. It was 200.
176%, right?
Oh, wow. Okay, so $5 billion.
Yeah, so if you get to $5 billion, which is, like, heroic, like, at current levels, you still trade at 6 times, which for me is the top of the range for them. Like, I don't get excited about it. So, like, I think that's challenging on the base case. Like, you're pretty much at the high end of where you should be trading as a commodity hardware provider. And I think, they're going to struggle to be profitable because they're going to need more sales and marketing. I think gross margins come down. And Microsoft eventually is going to, if Microsoft pulls the rug out from under them with 62% of their business today, like, a lot of that growth is probably banking on Microsoft continuing to behave like they behaved this year. And I don't really believe that happens. So, honestly, I'm more between the base case and the low case, and probably closer to the low case in a lot of ways.
But you can't. I mean, like, for a company, any company that's growing from 1.8 billion to 5.2 billion in a year, like, those are, like, Hall of Fame numbers. I mean, you wouldn't expect that company to trade at 6 times forward. like sort of putting everything else aside, like
So-
the founder issues, the debt issues, the
Sure.
commoditization.
You just shot yourself in the dick with a $5 billion estimate, man.
I will
It's like,
give you. I'm just going with what I call my base case. I don't know that I actually believe that, to be honest with you. But let's just entertain that. Okay. I probably think my low case is the most realistic, which is closer to 3.5 billion. Let's just say they execute well. But yeah, I think in that case, as long as they continue to grow fast, they will trade decently in the market. I just don't think it's long-term sustainable. So if you said, what is, I can't guess when Microsoft pulls the rug out from them, but my guess is it's going to be sooner rather than later. If you're Microsoft, like you're searching for growth, this is the area that you're most focused on. Like you're going to take this business. You're going to take anything that's interesting here. So I just don't want to take that risk.
But I think the thing that conflicts with that is like maybe Microsoft will pull the rug out from them at some point. But if they have $15 billion in RPOs, then like the rug's not going to get pulled out from them that quickly. Like they're at least going to be able to
15
go
billion.
into
I
that.
think that's over 4 years, right? So that's implying, they can eventually get to, 4 billion roughly of revenue.
That's with their sort of existing obligations today, and like I think it's a combination of like they have those existing obligations, so they'll obviously get to more significant scale. This is probably the biggest, fastest growing market in technology we've ever seen. There is like some utility for having a third party company like this exist. It will be several years before the hyperscale cloud companies are competitive like with NVIDIA in any reasonable way, unless they're willing to take like negative margins here. And so I think like you're right in the sense that like this valuation will be justified by growth and nothing else. And if they're able to grow even like to the base case here, well, like they'll trade at 10 plus times on a forward revenue basis, I think.
That's not a huge one. If you do the math on that, right? Like if they did $4 billion in revenue, ish times 10, it's 40 billion in EV. You're at 33 now, so that's not bad. But it's not riskless and it's not screaming.
Right.
Yeah.
But if they get to 5, right, and they're trading at 10 or 10 plus, and
that's almost double.
no tariffs, then you're close to like.
Yeah.
It's just like this company's valuation is going to be justified by growth more than anything else, even if there's like a lot of hair on it, which I agree there is, and I think that hair will catch up with them. Like I think you're right. Like there's their debt service is just outrageous. Like I don't think EBITDA is actually the right number to use for a company like this. I think it's like EBITDA minus cash flow is EBITDA minus CapEx.
Yeah,
is
it's more of an EBIT number. And even then, you have a lot of interest expense, but yes.
Right, exactly. So I think it's like the EBITDA number is like disingenuous maybe to like how this business actually operates, but I do think all of this hair will catch up with them eventually. It's just like, can you get in and can you get out before that happens?
And I think that's a risky game to play, right? And so, like, I could be completely wrong in the next year. They could crush the next year. I'll look like an idiot. But, like, I think it's just too risky to touch. Like, if you think of every investment in terms of, like, risk and reward, all right, so this thing goes and it, and trades to 10 times. It hits my base case. It trades to 10 times, right? It's worth 50 instead of 33. So what? You get 50% upside on that case. But the downside, I think, is massive. The downside is you could be trading at 1 or 2 times, instead. And I think you could lose, 70, 80% easily. And, with how indebted they are, in fact, you could be gone and hoping NVIDIA or somebody does rescue you. So I don't like that risk reward trade. But
I think Microsoft could buy them too.
year,
I don't know if you guys buy that.
cool.
Like Microsoft, just to get there's scarcity value of just data centers that have GPUs in them. We can make an argument against that. GPU lives shortening, now, useful lives. But it's that is a concern that came up in the research too, right? Like everybody's got these 6-year depreciation schedules. It's not clear they're going to be able to use them for that long. The obsolescence risk is really huge. I think these guys have a similar depreciation schedule, right? So I don't know how that's going to work out. Maybe this is a good time to talk about our real beliefs. What do you think, Bruce?
Yeah, I mean this is a really tricky one, honestly. I think like I'm generally in the camp of being on the sidelines here. Like I don't like the fundamental like operating metrics here, like across the balance sheet or maybe even the income statement in some ways. Like there's just a lot of yellow flags and a couple of like light red flags, I would say. Um, I feel like I'm going to be wrong on that though in the near term. Like I think in the next year they'll continue to grow. Like they have the juice to do it, they have the market to do it, they have the access to do it. So it feels like one of those things where like I'm sort of a long-term short, probably a short-term buy. I don't know if that's in our rubric, but that's what my actual opinion is.
I will echo that. I'm in the same. I think yeah. Until the rug gets pulled out, and it will get pulled out at some point. Like I think these guys will probably trade decently. I think right now their early trading is being held up by some of the IPO dynamics. They will probably go down from here for a little bit until the market stabilizes. But yeah, they could do great as long as they keep growing. But I would not touch kind of in that kind of risk reward dynamic I described earlier.
Yeah, to be honest, like I hate this thing. I fucking hate it. I'm just like I dug into it, and I'm just like I can't believe this thing. Like, and, you just don't want to buy a good, if it's a bad business long term, like just don't trade it. Just stay out of it, right? Like just be disciplined. And they say every business has its price, but I would argue just having come from common equipment, it's just like.
Well, and a business with a lot of debt that price could be the debtors take hold of it.
Yeah, I just don't like it. It doesn't. It's too unclear what their long term sustainable competitive advantage is. And by the way, right? Like I think you guys all nail it. It's just like it looks awful. I mean, it's probably going to double. The markets they get so frothy on these AI themes. Like it just like it doesn't have to have persistent fundamental value, and it really makes you want to buy it just because you feel like it's a bet on AI, and they're clearly not going anywhere for a while. If this ends badly, it's not going to end badly this year, but it's really tempting. But God, I'm just going to be a man about this and not stay on the sidelines. I'm just going to be like, you know what, short it. Because I'm going to pick a side. But yeah, I don't deny too that it could pop, in the short term, just on, AI market's not dead and all that good stuff. I could also argue conversely though, like there's headline risk with this thing left and right. Like when Microsoft didn't, add capacity, exercise their option to add capacity or buy additional capacity, and every time you hear somebody talk, there'll just be headline risk from, oh yeah, these guys are. Their risk with Microsoft business, whatever, the other 15% customer, people, this thing's going to be volatile, I think. So anyway, yeah, I'm definitely not a bull.
I don't think I would short this one just given the amount of volatility it could have personally, but
yeah,
I'll watch from the sidelines. Hey, yeah. Bruce, Nebius is another one that's on this comp list. It's kind of interesting. Are you able to talk about that one?
Yeah, I mean it's a similar story in a like slightly different geographic market, although they're expanding to the U.S. The kind of the TLDR is this is sort of the spin-off of a company called Yandex, which was the Google of Russia. It's the same founding team. After Russia invaded Ukraine, Yandex basically lost $30 billion of enterprise value. It was like a $32 billion type company. So
go Putin.
Yeah, so they ended up separating all of kind of the core search business, and the Nebius group was left with these surviving assets, and the biggest asset was a data center business that's based in the Nordics somewhere, and so they've operationalized that. I think the maybe twist with Nebius as opposed to CoreWeave and some of the others is, they have data sovereignty in Europe, and so they have access to a European customer base that's slightly differentiated, I would say, than the North American one. They also took an investment from NVIDIA, so they have access to GPUs. And the founder is the founder of Yandex, who he started and built into a $30 billion plus company. So he is a ruthless operator. They have no debt, I think, on the balance sheet today, and $2 billion of cash. So it's a much different balance sheet. And then they have exposure to kind of the same end markets that CoreWeave does. So a lot of the same themes, slightly different kind of ball of wax, but I think.
And they trade cheaper, right? At 4.3 times forward revenue.
Right. Right, and they're much cheaper. So, I think it's a good way to get access to the space with a slightly different flavor.
Yeah, so they're looking to do, they're a little bit smaller scale, 550 million of next 12 months revenue, but that's 370% growth on last year. So, no 700%, but healthy, and I think they're probably a bit more measured about how they're rolling out their service. And I've actually seen a lot of their billboards here in the Bay Area. They've put them up, across 101, which is kind of interesting to see. So it's, talking about getting access to GPUs, and they're marketing, they're trying to get customers. So it'll be interesting to see. But yeah, that one feels to me like a more safer way to play this theme if you like it. A little bit more under the radar, but, doesn't have the same customer concentration risk, doesn't have the same debt risk.
Full disclosure, I am a shareholder.
As am I.
You book talkers, you bum lookers. Okay.
You can come join the party, Gordo. You can get in at a lower price point than I'm in at.
You're always trying to get me in the mix, aren't you? Okay, with you guys. All right. Well, I think that's
alrighty.
fun.
All right.
With that, Bulls win.
I think it's Bulls make money. I don't know if they win, but is that winning?
I was gonna say Bulls win, Bears win, pigs get slaughtered, but let's do Bulls make money.
Bears
make money. Pigs
Say
get.
make money, money, make money,
One
money,
click.
money.
Yeah.
Money, money, make money, money, money makes the world go round. I'm the talk around town. Remy gave me the sound. I need that Skrilla on the Rilla. I need that Skrilla on the Rilla.